While most investors were sleeping on it, the United States government just made a massive $3.1 billion bet on a single company. And here's what makes this absolutely fascinating. When Uncle Sam puts that kind of money down, they're not gambling. They have access to intelligence, market analysis, and insider knowledge that most of us can only dream about. So what stock did they just load up on? And more importantly, what does this tell us about where smart money is flowing right now? Stay with me because by the end of this video, you're going to understand exactly why this deal matters and what it means for your investment strategy. Before we dive into the specific company, let's talk about why government stock purchases are such a big deal. Unlike retail investors who might make emotional decisions or hedge funds chasing quarterly returns, government investments are typically strategic, long-term plays. They're not looking to flip stocks for quick profits. When the government invests billions into a company, they're essentially placing a vote of confidence in that sector's future importance to national security, economic stability, or technological advancement. This $3.1 billion purchase isn't just a transaction. It's a signal about where our economy is heading. Now, the company at the center of this massive deal operates in a sector that is absolutely critical to modern infrastructure and national security. We're talking about a business that touches everything from defense systems to commercial applications, from cutting-edge technology to essential services that keep our country running. The government didn't just wake up one morning and decide to throw $3 billion at this stock randomly. This move was calculated, researched, and approved at the highest levels. Think about the layers of approval something like this requires: budget committees, strategic planning divisions, risk assessment teams. Every single one of them saw enough value here to greenlight this enormous investment. What makes this particularly interesting is the timing. We're in an economic environment where inflation concerns are real, where interest rates have been volatile, and where many investors are being extremely cautious with their capital. Yet despite all this uncertainty, or perhaps because of it, the government chose this moment to make this substantial commitment. That tells us something crucial. They see either immediate value that's too good to pass up, or they're positioning for a future trend they believe is inevitable. Either way, when you see this kind of conviction with this much money on the line, it demands attention. Let's talk about the broader implications of this investment. When the government becomes a major shareholder in a company, several things happen almost immediately. First, there's an implicit seal of approval that can boost investor confidence across the board. Other institutional investors start paying attention, analyst coverage increases, and suddenly the company has a spotlight on it that money simply cannot buy through traditional marketing. Second, government backing often means access to contracts, projects, and opportunities that might not be available to competitors. We're talking about potential defense contracts, infrastructure projects, research and development partnerships, the kind of steady, long-term revenue streams that create stability even in turbulent markets. But here's where it gets even more interesting. This isn't just about one company or one sector. Government investment patterns often reveal emerging priorities that ripple through entire industries. If they're betting big on advanced manufacturing, that tells us something about reshoring initiatives and supply chain security. If it's renewable energy, we're seeing climate policy translated into economic action. If it's technology infrastructure, we're watching the foundation being laid for the next generation of American competitiveness. The $3.1 billion isn't just supporting one balance sheet, it's potentially catalyzing an entire ecosystem of related investments and innovations. Consider the due diligence process that went into this decision. Government analysts would have pored over financial statements, growth projections, competitive positioning, management quality. and risk factors with a level of scrutiny that makes typical institutional investor research look casual. They would have assessed geopolitical risks, supply chain vulnerabilities, regulatory environments, and technological obsolescence concerns. They would have war-game scenarios ranging from best case to worst case. And after all of that exhaustive analysis, they still concluded that putting $3.1 billion into this stock made strategic and financial sense. That's not just confidence, that's conviction backed by data. Now, some skeptics might argue that government investments don't always pan out, and that's fair. History shows us examples of government-backed companies that struggled or even failed. But here's the critical difference. This is on the bailout of a failing enterprise or a political favor disguised as an investment. The structure of this deal, the sector involved, and the strategic rationale all point to a forward-looking play rather than a backward-looking rescue operation. The government is buying into strength and potential, not propping up weakness. What should everyday investors take away from this? First, it's a reminder to follow the smart money, but do it intelligently. You don't need to rush out and buy the same stock tomorrow, but you should absolutely be researching the sector, understanding the thesis, and determining if it aligns with your own investment goals and risk tolerance. Second, think about the secondary and tertiary beneficiaries. If this company succeeds with government backing, who are their suppliers, their technology partners? Their customers? Sometimes the best returns come not from the headline stock but from the companies in its ecosystem. The $3.1 billion figure itself deserves some unpacking. That's not seed funding or a speculative bet. That's the kind of investment that comes with expectations of substantial returns or strategic benefits. To put it in perspective, that's enough to fund major infrastructure projects, acquire smaller competitors, accelerate research and development, or expand into new markets. However the company deploys this capital, they now have resources that can fundamentally alter their competitive position and growth trajectory. And the government, as a major shareholder, will have a vested interest in seeing that capital used effectively. Looking at market dynamics, government investment can also provide a floor of support during volatile times. Private investors might panic sell during market corrections, but government positions tend to be stickier, held for strategic rather than purely financial reasons. This can create stability that benefits all shareholders and makes the stock less susceptible to the kind of dramatic swings that keep retail investors up at night. It's not a guarantee against losses, but it's definitely a factor worth considering when evaluating risk. The transparency around this deal also matters. Unlike some government contracts or arrangements that remain classified or obscure, this investment is public knowledge, which means markets can price it in, analysts can evaluate it, and investors can make informed decisions. That openness is actually bullish, because it suggests the government has nothing to hide about their rationale and expects this to be a success story they all want to point to down the line. So here's the bottom line. A $3.1 billion government stock purchase is never just about the money. It's a statement about priorities, a signal about future trends, and potentially a wealth-building opportunity for investors who pay attention. Whether you decide to invest in this specific stock or not, understanding why the government made this move gives you insight into where powerful forces believe our economy is heading. And in investing, having that kind of perspective can be just as valuable as having the capital to deploy. The smart play here isn't necessarily to blindly follow the government's lead, but to use their research, their conviction, and their strategic thinking as one more data point in your own investment analysis. Because at the end of the day, the best investments aren't made on tips or headlines, they're made on understanding, research, and alignment between opportunity and your personal financial goals.